Taxes. Picture this. Imagine you just had a hard month at work, slaving away flipping burgers at McDonald's. You're in bed when you get an email saying you've been paid $2,000, but your bank account only gets $1,456. You scroll down the stub. Federal income tax, state tax, Social Security, Medicare. This is the modern ritual of giving away a chunk of your money to invisible forces. Taxes are the cost of civilization. The government builds roads, funds schools, keeps your taco truck safe, and sends billion-dollar missiles. There are different types: income tax, sales tax, capital gains tax, Social Security, Medicare. Social Security tax forces you to save for retirement. Medicare supports older people or those with serious health issues. Filing taxes can be tricky. The government knows how much you owe, but makes you guess. Pay correctly and no worries. Pay incorrectly and you're in trouble. Some pay quarterly, some yearly, some not at all. Higher tax rates often correlate with higher quality of life. Banks may seem like safes, but they're middlemen. When you deposit $1,000, most goes to loans. This system is fractional reserve banking. Banks keep only a fraction, lending the rest. Banks make money from the difference between lending and deposit interest. Banks entice you to deposit because it's safer, convenient, and you earn interest. In the U.S., deposits are insured up to $250,000. Interest is money's rent. Borrow $1,000, paid back $1,280. Interest is the cost of using someone else's money. Simple interest is flat. Compound interest makes money grow exponentially. Missing a credit card payment compounds debt quickly, while investing at 7% annually multiplies wealth over time. Interest is either your worst enemy or best unpaid employee. Inflation slowly erodes money value. A $5 bill buys less over time. Causes include too much cash chasing few goods, supply chain issues, or expectations. Moderate inflation, about 2%, is normal, but spikes reduce savings and wages. Governments fight inflation by raising interest rates, making loans more expensive and spending lower. Recessions occur when the economy shrinks for 6 months or more. Jobs vanish, stock markets fall, people spend less. Causes: high interest rates, crises, wars, pandemics, or economic cycles. Recessions are painful resets. Governments may lower rates or issue stimulus. Credit scores measure trust, not wealth, ranging 300 to 850. Payment history, utilization, summary to increasing reality. Account age, mix, and new credit determine it. Ignoring credit is like ignoring a pet dog. It can ruin life. Currency is a social construct. Dollars are valuable only because society believes they are. Central banks regulate supply to prevent inflation or scarcity. Investing combats inflation by making money work for you. Instead of trading time for money, you trade money for money. Options, stocks, company ownership, bonds, loans with interest, funds, collections of assets, and real estate, property. Investing isn't luck. It requires being early, diversified, and patient. Markets fluctuate, but the real danger is never investing. Value is what humans assign to objects or services. Providing value earns money. iPhones, medical services, designer handbags. People pay for perceived value. Time is the most valuable asset. It's limited. Trading time for money is common, but investing time wisely multiplies wealth. Ordinary paychecks compounded over decades can create seven-figure retirements. Time works hardest in investing. Wealth isn't built in days, it's built in decades. Money in an investment doesn't just grow, it multiplies. Slowly at first, then faster. Ordinary people with modest paychecks can retire with seven figures because they consistently invest over time. They didn't beat the system. They use the system. The key is patience, consistency, and understanding compound growth. Even small amounts invested regularly, given enough time, can become substantial. Time is an unstoppable ally in wealth building, far more powerful than luck or income alone. Taxes, banks, interest, inflation, recessions, credit scores, currency, investing, value, and time are all interconnected parts of your financial life. Each element affects the others. Taxes fund services. Interest determines growth or debt. Inflation erodes money, and investing counters it. Recessions reset the economy, while credit scores affect access to money. Currency's value depends on trust, and value is subjective, shaped by human perception. Time amplifies everything. It can multiply your wealth or worsen mistakes. Understanding these forces lets you navigate finances strategically, making informed choices that build security, wealth, and financial freedom. Understanding financial systems isn't just about knowledge, it's about applying it. Use credit wisely, invest consistently, and respect the power of time. Avoid unnecessary debt, pay attention to interest, and let compound growth work in your favor. Recognize how inflation and recessions affect spending and savings, and consider how taxes impact income and investments. Money is a tool. Its real power comes from understanding its rules. Wealth is not about luck. It's about strategy, patience, and creating value. By mastering these concepts, you gain control over your financial future, turning ordinary income into long-term stability and growth. At its core, finance is a game with rules, but it's not rigged against you. Learning taxes, banking, investing, credit, inflation, and value equips you to play effectively. Time is your greatest asset. It can make modest investments massive and small mistakes costly. Interest works for you when you save or invest, and against you when you borrow recklessly. Money is a social construct, but its influence is real. Providing value and understanding market dynamics allow ordinary people to build wealth. Even small, consistent actions, compounded over decades, can secure financial independence, showing that knowledge, strategy, and patience outweigh luck in wealth creation. Ultimately, building wealth requires discipline, education, and time. Understand how taxes fund society and affect income. Know how banks operate and the mechanics of interest. Monitor inflation, navigate recessions, and maintain strong credit. Invest wisely to counter inflation and grow money. Focus on creating value that others recognize and are willing to pay for. Use time strategically. Invest early, stay patient, and consistently apply financial principles. Wealth is the product of understanding these interconnected forces and leveraging them over years or decades. Ordinary people can achieve extraordinary financial outcomes by mastering the fundamentals and letting time do its work. Time, investing, and value are the ultimate tools for building wealth. Money alone won't make you rich. How you use it and how long you let it work for you matters most. Even small, consistent investments grow exponentially over decades thanks to compound interest. Focus on creating value through skills, products, or services that others recognize and pay for. Protect your finances with smart banking, credit management, and understanding taxes and inflation. Patience, consistency, and knowledge are more powerful than luck or income. Master these principles, leverage time, and watch ordinary resources turn into extraordinary financial freedom.